Welcome, investors! Are you curious about NIO stock and wondering whether to buy or buy? Well, you've come to the right place. In this video, we'll reveal 3 insider secrets about NIO that you won't find anywhere else. We'll take an in-depth look at the Chinese electric vehicle company's recent performance, future prospects, and potential risks. So, fasten your seatbelts and get ready for an exciting ride as we explore the world of NIO stock. NIO, the Chinese electric vehicle manufacturer, is rapidly becoming one of the most prominent players in the industry. Between 2018 to 2022, the company has grown its annual deliveries from just over 11,000 vehicles to an impressive 122,000, a remarkable compound annual growth rate of 81%. Additionally, its revenue has grown at a CAGR of 74% over the same period of 4 years. NIO's growth rates are even more impressive compared to American EV makers like Lucid and Rivian, which delivered only 4,369 and 20,332 vehicles respectively in 2022. Despite this, NIO's stock, along with other EV makers, has recently experienced a dip as interest rates rose and created uncertainty in the market. Despite this downturn, NIO's stock is trading at a heavily discounted price, nearly 90% below its all-time high, making it an attractive option for investors. In addition to its current value of $7.45 as of May 3, 2023, smart investors should be aware of 3 critical aspects of NIO's business. These details include innovative business practices and strategies that set NIO apart from its competitors, making it a strong buy for those looking to invest in the electric vehicle market. Join us as we dive deeper in NIO's potential. Firstly, NIO has devised a unique solution to address a significant challenge facing the adoption of electric vehicles: the lengthy charging times at public charging stations. Typically, it can take up to 30 minutes to fully charge an EV, compared to just 2 minutes of filling up a gas-powered vehicle. This difference makes it difficult for many drivers to switch to electric vehicles. NIO's battery swapping network, PowerSwap, allows its drivers to quickly exchange their depleted batteries for fully charged ones in under 3 minutes. This service is available through individual payments or recurring subscriptions. NIO's battery swapping network is similar to that of Gogoro, a Taiwanese electric scooter maker, and sets NIO apart from other Chinese EV makers that rely solely on charging stations. At the end of 2022, NIO had 1,331 PowerSwap stations, a 71% increase from the previous year, and had completed over 18 million battery swaps. Additionally, approximately 50% of NIO drivers' power was charged using PowerSwap stations instead of traditional charging stations in 2022. NIO's expansion of its battery swapping network in 2023 may squeeze its margins in the short term. Still, in the long term, this innovative approach could give it an edge over its competitors in the fragmented Chinese EV market. Moreover, by saving time and increasing convenience for its drivers, NIO's battery swapping network could become a key differentiator for the company. Secondly, in 2016, NIO made a splash in the automotive world by launching its high-end EP9 Roadster. The supercar boasted a top speed of 195 miles per hour and a range of 265 miles. It also set acceleration records on every track it was tested on. Although the EP9 could have been more impressive than Tesla's top-tier Roadster, which can reach speeds of 250 miles per hour and has a range of 620 miles, it proved that Chinese EV makers could compete with their American counterparts in producing electric supercars. However, NIO did not mass-produce the EP9. Only 16 of the supercars were manufactured, and none have been registered for legal road use yet. With a price tag of $1.2 million, the EP9 was mainly a proof-of-concept vehicle. As a result, NIO shifted its focus to the development of its mainstream vehicles. Today, NIO has a lineup of 5 SUVs: EC6, ES6, EC7, ES7, and ES8, and 2 sedans, ET5 and ET7. This rapid expansion from a single vehicle, the ES8 in 2018, shows NIO's commitment to producing vehicles that cater to a broader audience. Thanks for watching this far. Let's get back to the video. Lastly, NIO may be a Chinese electric vehicle maker, but it's got global ambitions. It's already started to take baby steps beyond China, opening a store and battery swapping station in Norway and 2 showrooms in Germany. If successful, NIO's expansion into Europe could position the company as a serious contender in the fast-growing EV market. Europe is seen as a promising market alongside China. In addition, NIO could become a significant challenger to Tesla and other traditional automakers as it expands its power swap network across the continent. Investing in NIO right now is a speculative move due to macro headwinds and concerns over the listing US-listed Chinese stocks. NIO is also still profoundly unprofitable and won't break even soon. However, NIO has a better chance than Lucid or Rivian due to its growing vehicle production and battery swapping network. As such, investors willing to ignore the short-term noise might be rewarded for accumulating NIO shares while the market is ignoring the EV sector. While NIO has many positive factors, such as the rapid growth of the Chinese EV market and the popularity of its sedans in the country, the company's stock valuation is currently low. The ET7 luxury sedan has also received positive reviews, and NIO's battery swapping system is an attractive feature. However, compared to some of its competitors, NIO's catalysts are not as strong, and its vehicles reportedly have lower range capabilities, while its profit margins recently declined. Therefore, it may be better to invest in the shares of NIO's better-positioned competitors instead, although NIO stock still has the potential for outperformance. The Chinese EV sector is rapidly growing, with a projected 19% increase in unit sales of EVs and plug-in hybrid vehicles this year, according to Statista. NIO is expected to benefit from this growth, with its deliveries likely to increase significantly this year. In addition, NIO's electric sedans have become increasingly popular since their launch 12 months ago. The automaker sold 7,175 of them last month, up from just 163 in their first month of release and 7,120 in February. As China's EV market expands, it is likely that sales of NIO sedans will continue to increase. According to Sundin, the NIO ET7's range falls short compared to other EVs in the market, with a range of only 230 miles to 250 miles. This is significantly lower than Tesla's Model Y, which has a range of 317 miles. Therefore, if a long range is a top priority, there may be better options than NIO. Additionally, NIO's vehicle margin plummeted to 6.8% in Q4 2022, significantly lower than 20.9% margin in the same period the previous year and the 16.4% margin in the previous quarter. Although the company anticipates its margins to improve by the end of this year, it still poses a concern for investors. While NIO has some positive aspects, such as the popularity of its sedans in China and its battery swapping system, the range of its vehicles is a concern, and its profit margins have declined significantly. Investors looking for good EV plays with a better growth outlook may consider General Motors or Volkswagen. For rapid growth in the Chinese EV space, Li Auto or BYD may be better options, and XPeng, Rivian, and Arrival are also worth considering for investors looking for up-and-coming EV companies with unique strengths. While NIO is a good company, it may not have as much potential as its competitors, so investors may want to consider other options in the EV space. What do you think about NIO and its potential in the EV market? Leave a comment below and let us know your thoughts. Thanks for watching till the end. This is Fred, and I'll see you in the next one. If you want to see who will come out to be the best EV stock to invest in among these big four, check it out in this next video.